Good morning, everyone. This is Lance, an equity analyst of ABCap, and welcome to Daily Trading Notes. U.S. market surge as post-election rally continues. The major averages jump anew as the U.S. presidential and congressional elections near final results. As of writing, data from Bloomberg shows that Biden has 264 electoral votes, while Trump has 214 electoral votes. Meanwhile, the Democratic Party won 208 House seats and 48 Senate seats, while the Republican Party won 190 House seats and 48 Senate seats, according to Bloomberg. Dow Jones rallied 543 points, Nasdaq rallied 300 points, while the S&P rallied 67 points. For our market outlook, the local market broke past the 6,600 resistance yesterday, supported by strong volume. Market turned bullish alongside the global equities on the back of optimism on the U.S. elections. Market may likely test next psychological resistances at 6,700 and 6,800. Meanwhile, the Bank of England delivered a bigger than expected quantitative easing boost as most parts of Europe goes on lockdown. In other news, PH inflation for October came in at 2.5% versus 2.3% expectations and 2.3% September inflation. The figure was driven by inflation in food prices, specifically meat, in areas outside NCR. The BSP projected inflation to range between 1.9% to 2.7% on the back of higher electricity rates, LPG and kerosene prices, and higher prices of select items given weather disturbances. Year-to-date, inflation is at 2.5%. Also in other news, PLDT's 3Q 2020 core income up 14% to 7.1 billion pesos, while its 9M core income is up 8% to 21 billion pesos. TEL registered its highest quarterly revenue in 3Q 2020 at 43.7 billion pesos, up 11%, with all its segments booking all-time high quarterly sales as well. Its individual segment was up 15% to 21 billion pesos, home segment up 16% to 10.7 billion pesos, and enterprise segment up 8% to 10.6 billion pesos. As a result, its 9M 2020 EBITDA and core income grew 9% to 66 billion pesos and 8% to 21 billion pesos respectively. The company's cash collections dropped to as low as 84% of pre-ECQ level in April. Starting June, however, TEL saw significant improvement in collections, bringing the year-to-date average to 86%, with the management expecting it to further improve to 90 to 95% by year-end. Since 1Q 2018, the company has been seeing quarter-on-quarter improvement in its service revenues, with the exception last 2Q 2020 amidst the ECQ. TEL expects this trend to continue moving forward as it continues to build up its network. Note that TEL's capex is demand-driven, suggesting faster return on investments. And that's it for our market outlook. Have a good